ChainOpera AI is going absolutely bonkers. The question is why? Who is actually buying here and who is selling here? Is this just a pump and dump orchestrated by the whales, or is there something organic behind all of this? Let's have a look at the data most people are not considering. Let's have a look at the on-chain data. Now we're currently at $2.31. The chart is a hockey stick. We more than 10x'd in the matter of just a single week. And we're not going to go through the website because this is not how we can get any market edge, right? This is public information. This is very easily accessible. So most people already know what's written over here. We want to look at the data most people are not considering. Now, to get the obvious out of the way, there had been listings of centralized exchanges of the token. Those listings allow to bet on the price with leverage up to 25x. And there are some analysts warning against a potential rug pull because people that were involved in related projects did dump the token massively afterwards. In case you're not aware, there's a very useful website called Roger AI that analyzes different tweets. So it doesn't just show what kind of altcoins are currently being discussed, it also shows what influencers talked about a certain asset before it pumped. So you've got the early insiders over here, we've got the top KOLs over here. We can see what was their last post, at what market cap was the asset at the time of the posting. And so it might make sense to follow some of those people. Again, it's Roger AI. The website is askroger.ai. I don't have any affiliation with this. I don't get any money talking about this. I simply find the website quite useful. Now let's get back to the on-chain data. Let's have a look at who's actually buying and selling here. Are there a lot of small wallets, small retail investors that get into the token? Are there many whales that currently accumulate? We can see this all transparently by looking at the Binance Smart Chain. So that's where the token is listed. We've got 42,000 holders now. And what we see over here is the number of retail investors on the left, medium-sized investors in the middle, and whale investors on the right. To be counted for the chart on the left, a wallet has to hold at least 500 COAI tokens. So at the current price, that's roughly $1,000 worth of the token, a bit more than that. For the chart in the middle, a wallet has to hold at least 5,000 tokens, so $10,000. For the chart on the right, it's another 10x, so that's now 50,000 tokens or $100,000 worth of the token. We do not see accumulation for any of those wallet cohorts. So really, this seems to not be accumulation on chain that's driving the price. And the news regarding the listing on perpetual futures exchanges already gave a hint towards that. Now let's quickly talk about tokenomics. This is not necessarily that great, as in we've got a lot of internal team-related wallets. We've got treasury, we've got reserve, we've got the core team. It's not very transparent how all of those tokens will get used. The issue is that over time, the circulating supply will grow very quickly. Only 19.6% of the entire supply is in circulation. So over time, the supply will more than 5x. And if the demand doesn't 5x at the same time, then the price will underperform. Unless, of course, there's not more leverage entering the token. And that's the point of the current rally. Most trading volume does not happen on the spot market. We saw 338 million worth of spot trading on BitGet. But compare this with almost 5 billion worth of trading volume on Binance. So really, the price discovery now happens on Binance, and a few arbitrage bots adjust the spot price accordingly. Most people that bet on COAI tend to bet on rising prices. The funding rates are positive. In other words, this is not a short squeeze where the majority of people are betting on falling prices, maybe because of the tokenomics, and then the market makers short-term manipulate the price upwards. This is long-term buying potentially. This is also supported by the trading volume. The trading volume is not particularly high. The open interest continues to go up. It's currently at 30 million. And while there had been short liquidations, again, the funding rate is currently positive, so there are more longs than shorts. And so clearly, this is a rally triggered by a few large players that push up the price using leverage. They don't squeeze out the shorts, they're simply just buying up the token on the perps. And there is potentially still quite a bit of upside because the market cap is still just at 400 million. And very often these kind of rallies can go up all the way to the 3 to 5 billion mark. Will this happen with ChainOpera AI? I don't know. I cannot look into the brains that are currently pushing up the price in the derivatives market, but it definitely creates a lot of attention. Now, isn't it interesting how everybody is hoping for the next altcoin season, yet the market cap of the altcoins is quite high already. This is the others market cap. So the market cap of the altcoins that are not in the top 10. It peaked at the end of 2021, the beginning of 2022. And even though that's now close to 320 billion, the reason why everybody is disappointed is because of the underperformance relative to Bitcoin. This is now the others market cap relative to BTC. And this vertical line again shows the peak, and this gives an underperformance of 73% over the span of the last 3 to 4 years. And of course, part of that underperformance of the altcoins to BTC can be explained because of the demand from Wall Street. Wall Street isn't buying the smaller altcoins, Wall Street is buying Bitcoin. And this either happens through the Bitcoin treasury companies like Michael Saylor's strategy, or it happens via the exchange traded funds, via the ETFs. And both of those entities tend to just accumulate Bitcoin over time, pushing up Bitcoin relative to the rest of the market. I don't think, though, this is the entire explanation, because if this is everything, then we should see the exact same effect for Ethereum relative to the altcoins. And that is this chart over here. So for Bitcoin, we've seen a very long-term underperformance. For Ethereum, we did not necessarily see this. Yes, we peaked at a similar point. And yes, there was a long-term underperformance, but there was also an altcoin rally relative to Ethereum by 175%. Ethereum also has demand through treasury companies and through ETFs. So how is it possible that then the altcoins tend to rather trade in a range relative to Ethereum? Why aren't they long-term underperforming, like with the relative valuation to Bitcoin? This here, by the way, would imply an additional underperformance of the alts relative to ETH of maybe 26% if the current momentum prevails. I think the reason for this is the direct coupling of many alts relative to Ethereum. So many altcoins do not get priced in US dollars, they get priced in wrapped Ethereum. The liquidity pools are directly versus wrapped Ethereum. So when Ethereum goes down by 10%, then many altcoins automatically also go down by 10% in US dollars. Not a single trade has to happen for the price of the alts to drop when Ethereum drops. Just have a look at those altcoins, right? They're all against wrapped Ethereum, and this is really how the price of the altcoins is determined. It's determined versus ETH, not versus the US dollar. And so then we have to wonder, why do the smaller altcoins perform that badly? This is the performance of the smaller alts in the last year. So this is from rank 900 to 1000. And yes, there are a few alts that did fine. So we've got Cult over here, we've got Able over here. Those two both doubled. But at the same time, Ethereum went up by 87%. So a gain of 87% should actually be the default for those altcoins. The average should be 87%, but obviously it's not. The vast majority underperformed. There's only 2 altcoins that outperformed. All of those others did worse than ETH, despite the direct coupling, despite the long-term trading range. And I think the reason for that is token inflation, because what we look at here, that's market cap comparisons. We compare the altcoin market cap to the Ethereum market cap, but the market cap of the altcoins get distributed towards more and more tokens over time, because there is the VCs, there is the early investors, there is the team that tend to get more and more tokens over time. They get vesting unlocks and they sell those unlocks, depressing the price. So the market cap can be unchanged. If the supply doubles because of those unlocks, then the price gets cut in half. And so the prices tend to perform much worse compared to the market caps. Tokenomics.ai estimates a weekly unlock of more than 1 billion in the altcoin market. So if there isn't 1 billion of additional capital hitting the market in the alts, they tend to do worse than Bitcoin and Ethereum. And that's a problem. Alts are great when the market is expanding very quickly. When the market is just going sideways, they tend to be underperforming quite consistently. Even here in this market cap comparison, but especially in the prices. And so I'm following this strategy of betting on falling altcoins relative to Bitcoin and Ethereum for quite a while. This is a monthly chart of my personal trading portfolio relative to just dollar cost averaging into Bitcoin. Had I dollar cost averaged into Bitcoin, I would have gotten this line in gray, but instead I got the line in black because I bet on falling altcoins. And it's really not that complicated to make money with falling altcoins when most alts perform like this. And so I made dedicated videos on the topic. You only have to watch 2 of them, using perpetual futures to bet on relative valuations and risk management with relative valuation bets. It's 1 hour in total of content. After you've done this, you know how to compound your capital faster than the average investor. Again, without relying to find the next cult or the next Abel. Instead, we're just flipping this chart here around, right? Everything that's red becomes green, everything that's green becomes red. And there isn't too much green here, obviously. I'm also sharing my own trades, for example, here, when I shorted the MOVE token relative to Ethereum that was opened on the 5th of September and subsequently made 8.5% over 3 weeks. And again, this is not the 100x returns that are promised by other channels. Instead, it's just long-term compounding and betting on trends that are very clean because, again, there's more and more tokens that unlock and depress the price. So feel free to check it out. All of the tutorials, all of my trades, they are shared in premium. It's currently $125 per month. If you don't like premium, just message me within the first week and I'll refund you 100%, no questions asked. A link to premium pops up directly here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.